Good morning, students. Sairam. I hope you all are doing well in your studies. So, let's start the second part of the 10th chapter, Financial Market. So, in this chapter, the contents are concept of financial market, functions of financial market, classification of financial market, money market and its instruments, capital market and its instrument, type of capital market, stock exchange, its meaning and function, step of trading and settlement of procedure, SEBI its meaning, objective and function. So we have already learned about the what is the meaning of financial market, what are its function and classification of financial market. So let's start with the another topics. Let's review again what is the financial market. Financial market is a place where the investor invests their money for earning dividend or profit or any interest. So, and there are two persons who involved with the financial market. First one is investor who invests the money, and second one is borrower who borrow that money from the financial market, and the borrowers are the companies and government. So, financial market is divided into two parts, capital market and money market. Capital market is for long term and which is also governed by the SEBI, yani that means Security Exchange Board of India. Money market is for short term which is governed by the RBI, that means Reserve Bank of India. Now, capital market is also classified into two parts. Number one is primary market and second one is secondary market. Primary market is for new security, means if we want to issue new security, that means we go to the primary market, and after issuing that security from the primary market, if we want to sold out that securities, so we go to the secondary market. Now, again, what is the meaning of money market? As per RBI, a market for short term financial assets means if we want to invest in a short term assets, so we go to the money market, that are close substitute for money, means it is very liquid. If we want, when we want to uh, sell out that securities, then we immediately sell and get cash from these securities. Now, the mechanism that deals with the lending, and it is like it is a mechanism which deals with the lending and borrowing of short term funds, a segment of financial market in which financial instruments with high liquidity and very short maturities are traded. Now, there are some instruments, or we can say that the assets of money market in which we invest our money, and these are: number one is treasury bill, second is commercial bill, third one is commercial paper, fourth one is certificate of deposit, and last one, that means fifth is called money. Now, number one is, let's take a review of these points. Now, treasury bills means it is an instrument of short term borrowing which is issued by the RBI on behalf of Indian government. Okay, so treasury bills are basically who issue RBI on the behalf of Indian government. Okay, so in the treasury bills, it also give us the some discount which from which we get profit, which that discount we get as a profit. Like if we purchase a treasury bill of 1 lakh, then we will get that treasury bill in 10% discount, means we spend to purchase that treasury bill only on 90,000, and if we want to sell that treasury bill, then we will get the full amount, means 1 lakh. So 10,000 is a profit. Now, next one is commercial bill. It is also a short term instrument which is used to finance working capital requirement of business. So commercial bills bill is very popular in the, if we want to do a business. So for working capital requirement, it is a very short term instrument. Okay, now next one is commercial paper. It is like a it is also known as the unsecured promissory note. Unsecured means legally it is not certified. Okay, and promissory note, that it is like a promise which is done which is made by the company that we secure your money. So commercial paper is like a normal paper in which the company write a note that we secure your money, we save your money. Okay, so that's why it is known as unsecured promissory note. Next one is certificate of deposit. Bearer document issued by the commercial bank and other and development financial institution against the deposit kept by company, individuals and institutions with them. Certificate of deposit is like a commercial paper, or like a, yeah, it is also like a commercial paper, but these type of certificates are held by the big institutions and big banks. Means these securities are especially for the big institution and like commercial bank, financial institutions and big companies who want to invest their money in the certificate of deposit. Now last one is a call money, a short term finance which is generally used by the bank to maintain cash reserve ratio. If the bank feels that the cash reserve ratio goes down, so what they do, they make a call to the another bank and borrows that amount of money from the another bank, and the payback period of this call money is 1 to 14 days. So this is also a it is a very liquid form of asset or investment, means we easily get money. So basically call money is for banks. Now who are the participants of money market? So there are some participants in the who invest in the invest, or we can say that who issue the securities, and these participants of money market is big participants. Number one is Reserve Bank of India, RBI. Second, non banking finance companies. Third one is large corporate houses. Fourth one is commercial banks. Fifth is state government, and last one is mutual fund. So these are some people who are the participants who take a part in the money transaction in the money market. Now the next topic is capital market, the market where investment instruments like bonds, equities and mortgage are traded. Means this is type of the market where when we want to invest our money for a long period of time, so this market is for that securities. And the securities which is sell out in this or traded in this capital market are the debentures, equities, bond, mortgage and etc. And mutual funds are also comes under this. The primary role of this market is to make investment from investor who have surplus fund to the ones who are running a deficit. Now there is some points, some basis uh, at which we differentiate the money market with the capital market. Number one is its definition. Market where long term securities are issued and traded is known as capital market, and money market where short term borrowings lending of security take place is known as money market. Now maturity period, it's the capital market, the maturity period is 1 year or more, even be the indefinite, and in the money market up to the 1 year. Means we can sell our money, sell our assets and in 1 year. Now liquidity comparatively lower, and in money market the liquidity is high. Risk factor, look student, if we invest our money for a long period of time, that means in a capital market, so the risk factor is higher in that place. But if we invest our money for a short period of time, then our risk is also shorter or lower. Now next base is return on investment. Return on investment is comparatively higher in the capital market and lower in the money market. Last one is credit instruments. The instrument where we invest our money is, this last point is swap. So capital market instruments are like government securities, shares, bond, debenture, and currencies and derivatives. And money market instruments are treasury bill, commercial paper, municipal notes, money fund, repurchase agreement, and swaps. So students, last point is swap with each other. So I hope you all understand that. Now, type of capital market. Capital market is also divided into two parts, primary market and secondary market. As I said, primary market means it refers to the market where securities are sold for the first time. Means if we purchase and sell our security for the first time, that means we go to the primary market. And if we issue security, the secondary market, it refers to the market for the sale and purchase of previously issued securities. That means if we previously purchase some securities and then we want to sell out these securities, so we go to the secondary market. Means primary market for the fresh assets, or we can say that for the first time, and secondary market for the second time. Now, method of flotation. Method of flotation in a primary market. So number one is, method of flotation means how can we invite people to purchase securities in a primary market. Number one is offered through prospectus. Student prospectus is like a book which contain all details of the companies, details of the shares, debentures, bonds, and its data from the past years, and what are its future plans, etc. All the details are recorded in that book. So offered through sale is like a book which contain all the information uh, through which they directly invite the people for purchasing or investing in shares and debenture. Next one is EIPO. It is the initial public offering. That means if we purchase or sell any security through internet, means the internet facility is available by the stock exchange. Means if a company issue their securities through internet, so it is known as EIPO, means initial public offerings. So in this method we go to the site of the company or to site of the stock exchange, then we purchase and sell. Next one is offer for sale. Offer for sale means uh, it is like a offer for sale their securities. So this is also another method for the flotation and for the process of trading. Next one is private placement. Private placement means if we hire a private person like a underwriter. So underwriter, what he do, look student, offer for sale is also like the private placement, but offer for sale means a company hire a person, okay, but it is not a private, under the government or under the under the government. And then then the company sale or give their securities to that person, and give that person a responsibility to sell their product. Okay, so this is the offer for sale, but private placement is also just like that. But private placement is the person is who involved is a private, like any underwriter who helps to sell their securities, but not for like a sale. Offer for sale means offer for sale is for discounting, to give discount to the peoples for selling, and private placement is just like that the person who involved, the like the middleman, what he what he take on behalf of this, he take the responsibility to sell out their shares and their securities and take some percentage of commission on that securities. So this is a private placement. Now next one is right issue. Right issue is a right to issue, means it is a primary right of the shareholders, that the first they issue the shares to the big shareholders, and and this is its primary right, that first he take the securities, what amount of securities they want to purchase from the company, and after that all the securities, all the remaining securities are displayed to the general public. So these are the primary method, these are the flotation of method, or the method of flotation in the primary market. Now what is a stock exchange? Look students, here secondary market, like primary market we have done, secondary market is also known as stock exchange. A stock exchange is an institution, it is like an institution which provide a ready market for buying and selling of existing security. Look, existing security, that means they are talking about the secondary market. A stock exchange is also known as the secondary market. So secondary market and stock exchange both are same. So this is it is an institution which provide a ready-made market for buying and selling of existing securities like share, debentures, bonds, stock, and etc. Now what are its function? So what is the function of what is the function of secondary market, secondary, or we can say that stock exchange? So what it do, it provide a marketability, means it provide as a market where we sell and purchase our securities, and liquidity to existing security, and it also provides us the liquidity if we want to sell out our products. As a shareholder, if I want to sell out my securities and want money, so I easily um, sell our product in a stock exchange. Next one is pricing of security. The stock exchanges also give us the information of securities, means price of securities. Price of securities are also fixed in under the stock exchange in the secondary market. If we want to find out the price of any security, any share, debenture, we can find out from the stock exchange, means it provide us the information regarding the pricing, because the price of the commodity or the price of the shares and debenture and the securities are fluctuating due to the demand and supply in the economy. So it gives us the fluctuating, or we can say the recent price of this commodity. Now safety of transaction. The stock exchange also provides us the safety from the any illegal or any malpractices, means any fraudulent activity. So it provides us a safety from any illegal and fraudulent activities. So it is very secure and safe if we want to invest our money in a stock exchange. Now next one is contribution to the economic growth. Stock exchange, what they do, they are dealing with the finance, that means they contribute to the economic growth. Spread equity cult. Look student, equity cult means they promote people to purchase or to invest in the equity. So what they do, they promote people that it is a risky, it may be risky to invest in a equity shares, but it is also very profitable. So what the stock exchange do, stock exchange create the environment and promote the people to invest in the equity. Now what is the trading procedure if we want to open to sell out and purchase any security? Number one, that means look in the picture. Number first point is selection of broker, second is opening demat account, third placing an order, fourth is execution of order, and last one is settlement. So these are 5 points which come under the trading procedure. Number one is selection of broker. Number one, we want to select a broker. Like in a private placement, we have already learned in a primary market, we want a like in a private placement, we want a broker who hold the securities of different companies. So we have to deal with that broker. So number one, what we do, we select a broker. After selecting a broker, we want to open a demat account. So in a Security Exchange Board of India, means SEBI, we have to open a demat account. Demat account is like a bank account, saving account, which we open in a bank. So this account we open in a SEBI or any stock exchange. So it like in a bank account is for money, and this demat account is for holding securities. Okay. And after opening a demat account, we place an order that we want that this share of that company and this share of that company, means let's take an example that 100 share of Reliance company and 50 shares of Tata company. So we place an order, and after the execution of order, means who execute that stock exchange execute the order to the companies, and after that settlement, means after execution, what we do, settlement means we send the money for purchasing that, and that money goes to the company. So this is called settlement. So according to that picture, there is a buyer who want to buy securities, then he gave order to the security company, then security company to YSX, any stock exchange or any company, and then again that this is then he buy that security. But let's take that example again, like a buyer want to purchase a company, that YSX is a company. Okay. So if he want to purchase some share of that company, that YSX, then he contact to the broker in a security company, and then means stock exchange, then give a order to that person. And if the person is want to sell out the securities, then that seller, what he do, he again contact with the broker, and then broker send that information to the company, and then the company pay back that amount to the seller. So this is also the trading process, but these 5 points are the important points. So read these points again. Okay. Selection of a broker, opening a demat account, placing an order, execution of order, and settlement. So this is another example, like if we take the procedure for purchase of share. If we want to purchase a share, now number one is the investor who want to invest in the securities, or who want to invest in a share. Then what he do, first he select a broker, and after the selection of broker, he open a demat account, and after opening account, he place an order, the order placement, that kind of orders, like what type of order he want to, like share debentures, and the types, the share of one company, second company, third company. Then that information goes to the operator, then order execution, and after that confirmation from the office he get, and after the payment, the delivery of shares and money. The last point is he pay the amount, and to the company, and then company give him the shares. Okay. So this is the procedure of purchase of share. Okay class, I think this topic has been completed. Now remaining topic we will continue in our next video. Thank you.